Assalamu alaikum everyone. I hope you guys should be doing well. Uh, am I audible properly?
Yes, very audible.
Thanks, Moses. Thanks, Zubair. So, uh, before I start the today's class and start taking up your queries, so I hope you guys very well understood the flow of the class. Amar, maybe it's only you who is struggling with the audio. So can you please try logging out and logging in again, because all other are perfectly fine with the audio. Just a sec. Mm. So before I start, I like to take your feedback on the status of uh, where you guys stand with respect to the completion of our first topic, which is like capital gains tax. So are you guys done with that? Yes, no? What's the status? Can I have feedback from everyone? Nyash, good. Zubair, good. Moses noted. AM, Azan, Mushtaq, Mohammad Farid, Mohammad Mushtaq and Mohammad Farid, and Farhan. AM noted. Good to hear this. Who else left? Azan and Farhan. You two guys are left. Can I have your feedback? I have to go through the notes now. So isn't like you following both the things simultaneously? No? Okay. Amar, is your audio issue now resolved? Can you hear now? Farhan, you left. Please be quick in the feedback so that I can start. Oh, perfect. Noted, Azan. Uh, so the idea or the flow of this class would be, first I would be taking your queries relating to the topic. So today's topic is capital gains. So first I like to take your queries from the capital gains topic. Okay. So I'm going to can someone give some idea to Amar? Can someone give an idea to Amar how he can listen, if anyone has an idea? So in the starting 5 minutes, like before the prayers thing, yeah, that would be a good suggestion, Azan. Thank you. Yeah, to give a try, and like Azan said, so guys, I have opened up the PDF of capital gains tax. This is in front of you guys. Mushtaq, my opinion is yes, that has been created. So that has been created. If you are not there, I request you, I advise you to connect with the admin so that they can add you into the group, etc. And if you request and they do not respond, do let me know. Then I can at least follow up on your behalf. That's what I can do for you. Perfect. So guys, again, please post your queries, share your queries relating to this topic. This topic as in capital gains. Mohammed Mustaq noted. So you have a question on PPR deemed occupy. Any other question, please? Any other person? Any confusion? So Zubair, good point. So where do you stand from that perspective? What I will advise you is, once you are done with the notes, and if you are like, I have some time available with me, then in the second instance, as a practice, I advise you to follow the illustration examples available in the textbook rather than starting the exam kit. So AM, can I request you to rename yourself so that I can at least I can pronounce you by your name, AM, or do let me know your name so that till the time I remember that I can call you out from your name. Okay, sorry. Amos. Okay. So Amos, can I request you to do it other way around? So even if I make a summary, it would not be as memorable for you as if you make your own summary. Do share with all of us. Maybe it would be benefit for all of us. And at least I can tell you, be it benefit for others or not, it will be for surely beneficial for you. You will then 100% remember each and every relief, each condition of each and every relief. So that's what I would advise you that mm, I have noted we have many reliefs. Okay, so Amos, your point noted. So Amos, I really look forward to see your summary of the reliefs, conditions, etc. Application, once you are clear with the conditions, then application is not an issue. Application becomes issue if you are not clear with the reliefs. Incorporation relief, the area of cash consideration that's right is being deducted from the market value of shares. Azan, I noted from your question. Mohammed Mushtaq from asset damaged 1 point share for share and loan notes. Okay, perfect. So probably let me start from the Azan query. Before I start. Azan, on your point, if you notice the why incorporation relief is available. So incorporation relief is primarily available because you are not getting cash in the consideration, like you are transferring your business and you are getting shares in the consideration. Okay. So since you are getting shares in the consideration and you are not getting cash in the form of consideration, so that's why there was a concept of incorporation relief. Now, imagine if you are getting cash instead, and how you would get cash instead. So let's say rather than transferring all of the company only to me, I'm transferring some of the shares, let's say to my brother, to my sister, to any of my friend, and taking consideration from him or her. Then for me, 100% consideration is not in the form of cash. If 100% consideration is not in the form of cash, then the cash portion or the cash proportion is taxed immediately, and rest of the gains will be deferred or rolled over type of stuff. So basically that is the idea behind the cash consideration component that we normally deducted, because the market value of assets transferred is basically whatever assets you transferred based on the concept of asset based valuation. Whatever assets you transfer to the company, that would be the value of the company. But if the value of shares is not equal to the value of company, or you are receiving somewhat cash as well, then the value of shares would not be equal to the value of the company. Asan, do just let me know, is it like fine with you? Second, Mushtaq from asset damaged 1 point. So can you please let me know the page number so that I can exactly go to on that page? Good, Azan. Mushtaq, page number. Sure. So page 34, I crossed it. Yeah, so I'm on page 34. Mushtaq, your question now is on lines. The line written, an election can be made to deduct proceeds from the cost of asset. Okay, what does this line means? Maybe this is to be precise your question. So just imagine if my asset is damaged and I am reinvesting the proceeds to restore the asset. Technically speaking, I don't have any cash to pay the tax, right? Then technically speaking, I don't have any cash to pay the tax. In situations where I do not have any cash to pay the tax, in every such situation, tax authorities always allow me to give a relief. Tax authorities always allow me to give a relief. And in such situations, for every relief, we always need to claim a relief. Like none of the relief is automatic, except of few. None of the relief is automatic. All reliefs needs to be claimed. And if you need to claim all of the relief, so that is basically the context over here, that an election can be made to deduct proceeds from the cost of asset. Thanks, Omos. I look forward to your summary. Okay. Um, share for share and loan notes. This is your second. So Mushtaq, I hope it is clear, right? Second, what's your concern from share for share and loan notes? Let me navigate on that page. Yeah, thanks, boy. Yes, so this is, to be very honest, one of my favorite discussion. So that's why if someone can see smile on my face. Assumption. This is page 37. Okay. Is this page 39? Yeah. Oh, perfect. Amar, the answer is no. Can you hear me? Amar, like, is your audio issue resolved now? Yeah. So 25,000 last box. So Mushtaq, over the last box, the point number one, I hope you understand that qualifying corporate bonds are exempt from capital gains tax. Okay. Qualifying corporate bonds are exempt from capital gains tax. But whenever we talk about this asset is exempt from capital gains tax, it means that the disposal of that asset is exempt from capital gains tax. Let's suppose I have my phone in my hand. If I give this phone to you and receive loan notes from you, okay? I give this phone to you and receive loan notes from you. For you, it's a disposal of loan notes. But for me, is it disposal of loan notes? The answer is no. For me, it is disposal of cell phone. Okay. Let's do not talk on the lines like cell phone is wasting chattel, wasting chattels are exempt. Let's do not talk on those lines. But to keep the thing simple, just for the sake of example, I'm like, I give you my phone and receive the loan notes from you. So for you, it's a disposal of loan notes. For you, it is exempt. But for me, it is not exempt. Okay. I keep hold of the loan notes, and let's say after 1 year or 2 years or 3 years, I dispose of the loan. Now, once I receive the loan notes from you, from that date till the disposal date, whatever is the movement in the value of loan notes is my gain or loss. That portion is exempt. Is this thing logically, conceptually, like, do you understand this thing conceptually, logically? Now, translating all this conversation into this context. Under this context, I am giving my shares and receiving the shares of another company and loan notes. Receiving the shares of another company and loan notes. Okay. So from my side, what asset is being transferred from my side? Is it really the loan notes which I am transferring, or is it the shares which I am transferring? So that's why if I am giving shares and receiving loan notes, so that portion is not exempt. That portion is taxable. conceptually this thing clear? Is this thing conceptually clear to you? Like if I am giving my shares, and again referring to the consolidation topic, F7, F9 type of F7 SBR type of subjects. Now I'm coming on to this point, Mustaq. Whenever we study about consolidation, the first step is to calculate cost of investment and invest. And then while calculating cost of investment, if we ever have, I'm giving my shares and receiving loan notes. So I am giving shares and receiving loan notes. So for me, it's a disposal of shares. It is not a disposal of loan notes. Okay. Now, but since it is paper for paper exchange, because loan notes is also a form of paper, shares is also a form of paper. So that's why from the fundamental principle perspective, at time of exchange, there was no tax. At time of exchange, there was no tax because paper for paper uh, is like there is no is like a deferral relief type of thing where there is no tax at time of exchange. Whenever we dispose of the exchanged loan notes, it will be crystallized. It will become taxable. But the movement in the value of loan notes from the date when I receive till the disposal date, that is exempt from. Uh, sorry, I just noticed your thank you. So is it like resolved, Mushtaq? Any other, please? Again, starting half hour at least completely belong to you guys. Like whatever you guys ask. Perfect. Any other question? So Amar, I really not sure till yet whether you are able to listen here or not. Oh, Azan, it is only for the capital losses. Oh, that's great. You can hear me. So maybe I asked you 2, 3 times. So yeah. So again, guys, it's not the case that if you not raise your queries today, you are not allowed to raise it later on. No, you guys can still raise your queries, but I hope you guys understand that it may be more disturbance to others. So that's why I really encourage you to to follow the planner. Um, in relation to annual exemption, do all reliefs be availed in such a way that annual exemption is fully used, or this is only so if I am okay, Azan. So keep remember, reliefs is something different and loss brought forward is something different. Loss brought forward is just a step. Okay, annual exemption is just a step above the taxable gains, whereas reliefs are well very before the deduction of annual exemption. You can plan your relief in a way that your answer would equate to the annual exemption amount? I hope you understand. Like, you can plan your relief in a way that your chargeable gains after relief amount would be equal to the annual exemption amount. But comparing it with loss brought forward may not be an appropriate thing, because loss brought forward is something which is quite different, and reliefs is something which is quite different. So I hope I answered your question. Oh, hybrid class can be possible. Amar, possibility, yes, it is possible, but I'm not sure. So theoretically, it's possible. No worries, Azan. So all questions are equally important for me, and questions are always confusing unless or until they are resolved. So for reliefs, do we avail them until we have the annual exemption amount remaining? So a good point, Azan. So maybe on your point, look, if it is a deferral relief, so deferral relief means the tax is not waived. It's simply deferred for the time being. So if you have a deferral relief, and there is a possibility that you can pick and choose, or you can plan out the things at your own, then ideally speaking, your relief, then ideally speaking, you should plan your relief in a way that your chargeable gains equals to the annual exemption amount. Okay, because then less amount will be deferred, and in future the tax would be on less amount, because if you claim the full 100% relief today, and I'm talking about deferral relief, chargeable gains would become nil. Then your annual exemption will be wasted, because you do not carry it forward. It will be wasted. So try to utilize your annual exemption, i.e., wasting annual exemption, personal allowance type of stuff is never ever the preferable or appreciated strategy. Most welcome. Yes, guys, other questions, if any? No question. So can I take the endorsement from each and everyone? Azan, Amar, Hamza, Zubair, Mushtaq, Niaish, Farhan. Thanks, Mushtaq. What about others? Thanks. Thanks, Farhan, Niaish. Who's left? All done? Mushtaq, Zubair, Farhan, Ash. Okay. If no more questions from the capital gains, then I like to discuss one question from the exam kit relating to capital gains. And obviously, when I will be discussing capital gains with you, so I'll try my best to keep the question towards this particular topic only rather than touching base each and every topic. So do let me know your feedback. It's like whether you guys are comfortable to open exam kit at your own, or uh, or it's basically you guys are following the screen. Do let me know how you are comfortable. Following the screen, you guys are comfortable? Okay. So by the way, your exam kit and textbook both are available at your Google Drive. Okay, so I do recall someone was asking about this. So just for the reference, it is available at the Google Drive. So if you look, this is the at the moment relevant area. And the reason being I'm using the word at the moment because currently we are doing capital gains tax. Then our next topic will be inheritance tax. So currently this would remain our relevant area. Okay. From this, again, I do not advise you guys to start attempting the questions at your own. Rather, what I will advise you guys is if you get some of the time to do the practice, then what I will advise is to follow the textbook questions rather than starting picking and solving the exam kit. At the moment, I'm going to start question number 42. 120 page number. I'm going to, as a last option, not as a first option, I need to turn off my camera. I need to shift my laptop to writing mode. I have taken out my pen. And last not the least, creating one more document to solve the exam kit question. At 25, you should assume that today's date is 1st September 2025. Liber and his sister Vesta have requested advice on Liber and his sister Vesta have requested advice on the timing of the sale of shares acquired by Liber in a recent company takeover. rather than leaving the asset in her estate upon her death. I hope you can join the dots that this is something which not only belongs to IHT, sorry, not only belongs to capital gains, it has some flavor of inheritance tax as well. And um, hello, can you hear me now? Am I audible? Oh, thank God. I don't know. Maybe some, like, I just removed the USB like from my laptop, reconnected. So maybe, so probably I need to read the question from here again, right? That's what I read from the comments. LIBOR, okay. LIBOR is UK resident and domiciled, has taxable income of 30,000 each year. Guys, I'll be keep advising you some of the key important points while reading the question, okay? Taxable income of 30,000 each year. Taxable income of 30,000 each year means this income is something which is after deducting personal allowance or before deducting personal allowance. So this is something which is taxable income of 30,000 after deducting. So it means, just to, you know, for reference. So, while immediately reading this, I am like 37,700 is the basic rate. Minus 30,000 of taxable income. So it means 7,700 of basic rate is still available. Okay. If the statement says that This 30,000 is total income. Then the change in my working should be 30 minus 12,570 taxable income. Then according to taxable income, I would have calculated like how much of the basic rate band would be available. I hope that is clear. Okay. LIBOR acquisition of ordinary shares in Mercury PLC. LIBOR purchased 800 ordinary shares, a 40% holding in V Limited for 40,000 on 1st July 2020. Mercury PLC acquired 100% of the ordinary share capital of V Limited on 1st June 2025. In exchange of each ordinary share in V Limited, LIBOR received the following: 4 ordinary shares in Mercury PLC valued at 20 per share and 7.5 cash. And 7.5 cash means there is share for share and cash exchange. Okay. And when this happened, 1st June 25. 1st June 25 means I'm talking about fiscal year 25-26. Mercury PLC has 200,000 issued ordinary shares. Okay. LIBOR has never been director or employee of either V Limited or Mercury PLC. That okay. From this statement, like, what's the importance of this statement? Why this statement? What are the consequences of this statement? Everyone, please. What are the consequences of this statement? Mushtaq, never been director or employee doesn't imply, doesn't link with the concept of investor. This basically links with the concept of BADR. Good one, Zubair and Azan. So it means there is no BADR. Is this thing clear? Is this thing clear? Other way around, a question to all of you. No BADR, I understand. Can we think about investor relief over here? Can we think about investor relief over here? Okay, Mushtaq, maybe the point which you were trying to say at that time, that is the thing where I am circling right now. Can we think about investor relief? So initially you said investor relief. So maybe the first implication of this statement was like there is no concept of BADR because the person is not an employee. Now, my question is probably now towards your answer. Can we think about investor relief? For investor relief, person should not be an employee. That is true. He is not an employee. For investor relief, shares should be purchased after March 2016. It is purchased after March 2016 because LIBOR purchased the shares on 1st July 2020. There was no minimum shareholding percentage requirement, like he owns 40% or 4% or 1%. Investor relief was available. What's stopping me from the investor relief? Very good. Can you guys establish that it is newly subscribed shares? At the moment, I'm not talking from the company perspective, right? Like company should be unquoted trading company. So that part is silent. So I'm not commenting on it at the moment. But can you establish this thing? Is it's a newly subscribed shares? under this point? Can you establish this? Um, the answer is no. I cannot establish this thing. That is not mentioned in the question. So newly subscribed is not a norm. The norm is to purchase the existing, or you can say the used shares. Okay. So by default, I will not assume that shares are newly subscribed. I hope that would be clear, right? So no investor relief. And for BADR, that is categorically no, because he's not an employee. Are you guys fine with the conclusions? If yes, then I like to move to the next point. Thanks, Zobair, for the feedback. What about others, please? Others. And even if you are not clear, please do raise, sir. We are not clear on the point. Repeat something. So concludingly, Farhan, yes, no investor relief as well. Why not assuming new shares? So that's what I said, Mushtaq, that default, by default, do we purchase the new shares, or by default, do we purchase the existing shares? What is the norm? What is normal from a shares purchase perspective? So based on your comment, it's like, if ever new subscribe shares, that will be mentioned. If new subscribe is not mentioned, then I will not assume it at my own. I always assume it to be existing shares. Okay. Let's continue. Liber proposed transactions in Mercury PLC shares. Liber now wishes to sell all of his shares in Mercury PLC. He has received an offer from an unconnected person to purchase these shares on 1st January 26 at a price of 28 per share. Uh, which fiscal year he received an offer? In which fiscal year? Liber would prefer to sell shares to his nephew, Janus. However, this would delay the sale, as his nephew will not have the necessary funds to purchase the shares until 1st May 26. So if we sell out the shares to unconnected person, he will be selling out in fiscal year 25-26. But if we sell out the shares to his nephew, Janus, then he will be selling out the shares on 1st May 2026, which means fiscal year 26-27. Janus has said he will also pay 28 per share. So disposal proceed would remain the same, no change in disposal proceed, but the fiscal year will be changed. Is the conclusions takeaways clear till yet? Perfect. Moving ahead to the Vesta. Vesta is 66 years old and has never married or had a civil partner, is in ill health and is expected to die at some time within the tax year 26-27, has made no disposals for capital gains tax purpose in the tax year 25-26 to date, and will not make any in the tax year 26-27. Okay, so she has not made any disposals in the tax year 25-26 and no plan of 26-27 as well. Has made one previous lifetime gift of 350,000 cash to her son Janus on 1st June 2025. Is it eligible for capital gains tax? Is it eligible for capital gains tax? This one. Why the answer is no, Mushtaq? So I'm not saying your answer is wrong, but I just want to know your rationale. Okay. But isn't transfer of asset eligible for CGT as well? Like just imagine if I am giving my house to my daughter, it is PET, I agree, but isn't like taxable under capital gains? It is taxable under capital gains. I am giving an asset to my daughter. So gift of asset is a chargeable transfer. Good one. Because cash is an exempt asset from capital gains purposes. So since it's a cash of 350, so based on cash, I can conclude it is exempt from CGT. Right? Vesta investment property. uh, Mushtaq, you responded and you are not there. So the point is, cash is an exempt asset from capital gains purposes. Do you agree with this statement? So since it's a cash, that's why it is exempt from capital gains tax. So there is no CGT on this transaction. IHT applicable, I agree, but there is no CGT on this transaction. My friend, Vesta till this point is not expired. Till this point, Vesta is alive. So don't kill her at the moment. Till this point. And next point, if the question kills by itself, it's a different thing. But let's not kill Vesta at our own. Vesta investment property. Vesta owns an investment property which has never been used as a private residence. Never been used as private residence means there is no concept of PPR on this property. Okay. The current market value of the property is less than the price Vesta paid for it. And its value is expected to fall further throughout the tax year 26-27. Like Vesta, the current market value of the property is less than the price Vesta paid for it. Means the value has declined of the property, and if I make a disposal, there will be a capital loss at the moment. Vesta is considering gifting the investment property to Janus in her lifetime rather than leaving it to him in her estate on death. Okay. Janus is the sole beneficiary of the Vesta estate. So, two options with Vesta. Option one, transfer the asset in life to Janus, and option two, keep the asset, keep the property with her till the time of death. You should assume that today's date is 1st September 2025. Explain with supporting calculations The capital gains tax implications for LIBOR of the takeover of V Limited by Mercury PLC on 1st June 25 and the subsequent sale of his Mercury PLC shares on 1st January 2026. Okay. Focus on the verb, please. Explain with supporting calculations. So mainly what I'm supposed to do, mainly I'm supposed to calculate or mainly I'm supposed to explain. What I'm supposed to do mainly, I'm supposed to explain. Yeah, that is true. Like it's both, but mainly I'm supposed to explain. Okay. Part two. Explain with supporting calculations why it would be beneficial for LIBOR to sell his Mercury PLC shares on 1st May 26 instead on 1st January 26. Explain with supporting calculations. Advise Vesta whether or not there will be any capital gains tax or inheritance tax advantages for herself or for Janus if she were to give the investment property to Janus on 31st December 25 rather than giving it to him in her estate on death. Advise whether or not there will be capital gains tax or inheritance tax advantages for herself, means for Vesta, or for Janus. If she were to give the investment property to Janus on 31st December 25, so two options. Option one, she can transfer it in life to Janus. Option two, rather than transferring it in life to Janus, she can keep the property with her till the time of death and transfer it via estate. So if she transfers in life, what will be the you need to advise whether there will be any advantages from capital gains and inheritance tax perspective. Since as of today, as of right now, as of 20th September, we are not done from a planner perspective as a class. We are not done with the inheritance tax. So I'm not going to talk or comment about part B of the requirement. Rather, I'll keep my discussions limited to the capital gains only. So for this part of the question, I request you guys to attempt it at your own. Attempt at your own once you are done with the IHT. Okay, we can discuss the part B of the question in our next class, but I'll keep my discussions right now limited to part A of the requirement, which is about capital gains tax. I hope that would be perfectly fine. So Mushtaq, since this is a residential property, then there is no need to talk about 10 or 18 straight away. That would be 18%. So I'm still leaving this question to you and I'm focusing on part A of the requirement. Part A is capital gains tax implications of takeover and subsequent sale of shares. On 1st January 26 and with supporting calculations, okay? We are doing, this is question 42. LIBOR from Kaplan exam kit, okay? I'm not doing the question properly, i.e. the way it is being asked. Rather, I'm solving this question informally, like, rather than focusing on format of the answer, I'm focusing on content of the answer. Format of the answer means like my focus is not towards what should be in the like exam format properly. I'm only focusing on the content, like what should be part of the answer. So it's like LIBOR purchased 800 shares of V Limited, 800 shares for amount of 40,000. V Limited was taken over by Mercury PLC, and Mercury PLC offered 4 ordinary shares and how much cash? 7.5 cash. Good one. So based on this, LIBOR would get 3,200 shares. LIBOR would get how much cash? It would be 6,000 cash. Thank you. What was the share price of one share? 20 per share. Um, 20 into 3,200 is 64,000 for cash. There is no concept of market value. 60. $6,000 divided by, can someone please help me in the calculation? 36571. 3429. right? Needless to say, needless to say, this is share for cash. Text immediately. This is share for share. Text at time of disposal of shares, right? Cash portion. Disposal proceed 6,000. Cost of cash. And we are doing these calculations on 1st June 25. As a result, gain becomes 2571. Disposal of shares that was happening on 1st January 26. If it happens on 1st January 26, disposal proceed would be he had 3,200 shares. He received an offer for 28 per share. So as a result, that due to the disposal of shares, cost is 36571. Gain amount total gains 55,600. Annual exemption taxable gains 7,700 would be taxed at 10%. I hope you guys are okay from where I drive the 7,700. I hope all would be okay with the 7,700 thing, right? Also, I just got the feedback from one. I hope all would be clear. 52,600 minus 7,700 into 20%. So the amount of gains which fall under the high rate is like the tax amount. Please, the tax amount 8980. Eight nine eight zero plus 770. Any question, confusion in this 9570? Any question, confusion in this 9570? Thanks, Mushtaq. Others, please. Thanks, Zubair. Others? Uh, Azan, Amar, Hamza, Niaish, Farhan. That will be zoomed out position. Do you want to look this or you want to look for the previous page, Farhan? Is it done? Great. Now, as per part A2, as per part A2, so the part A2 is basically explain with supporting calculations why it would be beneficial for Liber to sell Mercury PLC shares on 1st May 26 instead on 1st January 26. So as an starting statement to set the context, if sale of shares delayed till 1st May 26, the disposal of shares would be in 26-27. Total CGT would be cash exchange gains, which is in fiscal year 25-26, 2571 less annual exemption, restricted, it means no tax on it, share disposal gains, which is now in 26-27, 53029, on these taxable gains, now I'm going to start applying the capital tax rates on it. The 30,000 income of LIBOR is not only for 1 year. Like if you look, taxable income of 30,000 each year. So every year he has taxable income of 30,000, right? So 7,700 at the rate 10%, 50029, 8446, 8466, 8466 plus 770, and here it's already nil. So under this option, total CGT for both years, cash and the shares, it is like nil plus 9236, total becomes. So if you delay the sale, total capital gains tax savings would be 9750 minus 9236. Is this thing clear to you guys? Mm, okay. So I'm done. Any feedback on this question? Zubair, the answer is yes. So that's very important to keep the old topic in mind, because if I not follow this strategy, what you are asking, I can bet the previous topics will be no more in mind. So that's pretty much important to keep all topics in mind, my friend. So at the moment, currently, if you're not familiar with the format, that is fine. Because let's say from today till next month, I'm just saying, solving the question rightly is important as compared to following the format. Once we are familiar, once we are hands-on with the correct solutions, then probably solving in the right format would be secondary for me as of right now, obviously. Perfect. So if there is any question further relating to capital gains, do let me know. Otherwise, I'm good to off for the day because we are done with one question of the exam kit. We are done with your queries. So still, if anyone has any question, I'll save this PDF and upload it in your drive as well. So I hope all of you guys have the access to the drive. Question 42. Uh, Amar, to be very honest, I not mentioned the uh, I not mentioned the theoretical explanatory part into the question. Rather, what I was telling while solving the question, that is what I need to capture in the question. So that is the only thing. Otherwise, like I said, uh, this is basically the first question. That's why I not followed it properly. Rather, I kept it more of, I would say, like keep it from the bird's eye view perspective. Like solving the question right was at priority for me rather than following the formats. But needless to say, when I will move forward, obviously, slowly, gradually, I'll move towards the focus on formats as well. Uh, Mushtaq, so the best approach maybe for this type of issue is you can drop a message in the group and tag to them. I'll also follow up. I'll also ask about that. So that's what I can do. Farhan, for sure, please, that would be really appreciated if you guys attempt the questions at your own, whatever we do in the class, and do raise your questions in the group, in the next live class, whatever is comfortable to you. And like I requested, please do that, Mushtaq. And like I said, uh, please do attempt part B of this question at your own, please. Oh yeah, so Azan, for next week, the topic is inheritance tax. So first I will be taking up queries from the inheritance tax. And once we are done with the inheritance tax topic, then I will start the exam kit question of inheritance tax. And obviously, needless to say, like today, I was cautious that I need to pick the question which only belongs to capital gains. But while picking up the question for next week, I will be cautious that question belongs to two topics, inheritance and capital gains. So if even it's belong to capital gains, that would be fine for me because theoretically speaking, we are done. No, not theoretically, like factually speaking, we are done with the capital gains tax. So in next, like today, I skip part B of the question because that belongs to inheritance, which I'm which we are not done yet as a class. But next week, there will be no such excuse. So maybe someone asked the question on these lines exactly. As we move forward, I'll picking up the questions from the exam kit, which belongs to both the topics rather than only one topic. I hope that makes sense. Fine. So if no more question, I can say goodbye to you guys for the day. If anyone has any question, I'm still available to like talk to discuss, but perfect. So thank you very much for the day, guys. See you inshallah on next Saturday. In the meanwhile, take care of yourselves and please try to complete the topic rather than joining the class with incomplete topic. Please try to complete the topic so that these classes would be more effective for you. Okay. Thank you very much. Take care. Allah Hafiz. Allah Hafiz.